and welcome. You're watching Your Trade Journey now. I'm Shriti Sharma and with me is Anisha Jain. And in the next course of 30 minutes, we will tell you the top highlights of the week gone by. And not just that, also get you ready for another and the upcoming week's action. But for the market, Anisha, this time around, though it was a truncated week, but an action-packed one. We had the RBI monetary policy, a lot of action on the commodity side, as well as the option weekly expiry also had its role to play. Oh my god, and I'm very worried about the coming week because it's TCS and Infosys which will come out with earnings. So forget about this week which was truncated. I'm more worried about the coming one. Yes, that's going to be truncated as well because April 14th is a holiday and that's the only saving grace that I have in mind at this point of time. But nonetheless, yes, the markets ended on a positive note this week as well. So something to cheer for the market. And a lot of action was actually pulled higher by the RBI decision wherein there was a surprise pause coming in this time around. The street was factoring in it was going to be a 25 basis point hike, but it was a pause, not a pivot though, but a this point of time. So the markets have been advancing for 2 weeks in a row. The mid-cap index also managed to do its bit and in fact was up around 1.1%, so a bit of an underperformance, but the small cap index was up over 2.3%. The biggest gainer this week was one of the rate sensitives and that's realty. Bulk of the move actually came on Thursday itself, wherein that rate decision came in, but 4% higher for the week. Pharma also had a decent week and then auto was reacting to the monthly update as well, which was better when it compares to the two-wheelers as well, and commercial vehicles continue their outperformance. What was in the back foot was IT, so ahead of the earnings lined up in the coming week, it was going a bit tempered into that. And then the FMCG updates in the week gone by haven't been too exciting, whether it was a Marico or a Dabur or even the likes of Nykaa, etc. and DMart. They managed to disappoint thoroughly when it comes to their Q4 updates. So the reaction coming in as far as the stock prices is concerned as well. But let's welcome on board our guest on the show. We have Rahul Shah joining us to talk to us about the fundamentals of the market. And then we also have the technical expert joining us, Rajesh, to talk to us about how things are stacking up. Rajesh, hi, let me first come to you. Market did make a big breakout this week, 17,600 scaled after almost a month. But from here on, are we going to quickly go towards that 18,000 mark, you believe?
Yeah, good afternoon. So it was a truncated week, but we have seen broad-based buying action in the market. Most of the sectors have contributed to this rally, and Nifty is now comfortably closed above 17,500. That was the major call concentration area. Now comfortably Nifty is holding above those levels. So short covering, and in today's session we have seen a long built up in Nifty as well as for Bank Nifty. So both indices are looking now positive, and looking at the overall setup, we believe yes, some more momentum for the upside we can expect in the coming week, and possibly Nifty can move further higher towards 17,750, 17,800 in the continuation of this up move. 18,000 is a very challenging and crucial level. Some of the sectors are still not contributing to this really, but looking at the setup, we believe yes, 17,800 can be expected in the coming week. One can hold their long position with stop loss of 17,450. For Bank Nifty also, we are bullish, and as Bank Nifty is now trading above 41,000 level, so clearly shows that this momentum can catch up further, and possibly Bank Nifty can scale up towards 41,500 in the continuation of this trend. One can hold Bank Nifty also for this target and keep stop loss now at around 40,700.
Okay, so holding a bullish view on both the indices as well as 18,000 could be challenging. That's the take coming from Rajesh. But let me welcome on board Rahul as well. Hi, very good afternoon. Rahul, financials had a good role to play in the week gone by, wherein for the Bank Nifty, just in 3 trading sessions, we have seen a move anywhere between 400 to 500 points. But what is good to see is that the operational updates have been robust, not we are seeing action in the large cap banking names, but other than that, mid and the small caps are also showing some momentum. Going ahead, how are you placing yourself in terms of specifically for the financial space? Where are you betting on?
Hi, good afternoon. I think as you rightly pointed out, I think post HDFC Twins and Bajaj Finance posting their quarterly updates, and I think we've seen the stocks getting re-rated and good kind of good rally in both the stocks and in the entire sector. So I would still like to stick to the large caps. So obviously the preferred being the HDFC, the updates have been quite strong, and I think in this kind of a volatile markets, I think the best to stay with the large caps. So HDFC being the preferred amongst them, and then I think followed by I think NPSU, that State Bank of India. Looks very interesting with the recent correction also. So I feel that these two financial names looks very strong in coming next week.
Okay, so that's the take coming in as far as the banking and financial space is concerned. But real estate also saw quite a bit of up move this week, right, Rahul? Does it warrant a fresh buy in some of these names? Because affordability is something that we all were talking about.
I think the real estate after a good move, I think we saw a deep correction in most of the real estate stocks. So I think as we go ahead, I think we would have a select pockets and a few stocks amongst them where which will continue to do well. So I feel that amongst them, I think Luda remains one of the preferred bets. Oberoi Reality remains a preferred bet, and if I go to a regional play like Prestige or something would remain a preferred bet in amongst them. But in all, I feel that I think overall the real estate as a sector looks very promising. And as we saw for today's RBI policy also, and where we saw the pause in the rate, there was no increase in rate hikes. So, and then we could see some kind of a pause among them, and I think we could see some renewed more interest in the real estate stocks as well from here.
More interest could be seen in the real estate space. But Rajesh, coming to you and shifting focus to the commodity world now. In the week gone by, we have seen a lot of action when it comes to crude on the back of Saudi Arabia announcement of production cuts, as well as gold hitting its all-time high levels at the MCX. How are you seeing both of these commodities on the charts, and where do you see them headed on from here onwards?
Yeah, definitely. So gold has given a clear breakout, and now it's trading about $2,000 mark. And looking at the overall setup, the strategy one should adopt in gold is buy on dips only. And we believe that furthermore upside momentum we can see towards 2080 to 2100 level for the gold in the continuation of this uptrend. So until gold not breaks below $1980, one should remain on the long side of the trade, and possibly gold can inch up further higher towards 2100 level also, because it's almost near to its all-time high trajectory. So looking at overall buying interest which is happening in the gold, so every dip is to be used as a buying opportunity for near-term to short-term setup. Even on the crude front, also we have seen a significant rally in the coming in the previous few trading session, and now looking at the MCX prices, we believe that if crude is continues to hold above 6300 level, then possibly crude can inch up further higher towards 6650, 6700 in this continuation of this up move. So looking at the near term, short term setup, we believe that crude can show further more bullishness from the current level. 6300 should be your stop loss on the M6 prices.
Okay, so that's the take coming in as far as where these couple of commodities are headed. But talking about commodities, the commodity pressure as far as FMCG stocks seem to have ebbed away, because in the commentary coming in, whether it was Dabur or even Marico, they did talk about the worst of inflation being behind, but now there are concerns coming in as far as the top line is concerned, because they're reporting what, mid-single digit growth coming in for Dabur, Marico also disappointing. Rahul, would you want to take a bet on any of these names, or how should one approach, in fact, the FMCG staple names?
If you look at the Q3 numbers, I think one clear trend was that I think there was a destructive demand. We have seen that in the demand from the consumers was sluggish. So I think the most important thing to notice the coming quarter results is going to be the demand. But I think the kind of seasonal rains and the inflation which has cooled off. So I think one positive and one negative. So I think both mitigate. So I think importantly, I think if the volume picks up and the consumer demand comes up, then I think you would see re-rating. Or else I think there'll be very select pocket and consumer names where the margins will get impacted, or where the margin expansions because of the commodities prices cooling off. So I think if I have to look at it in this fact, so I think Godrej consumers remains a top bet in my entire list, followed by I think one should look at Marico. Rest I think I would still wait for a while till the quarterly numbers.
Godrej Consumers and as well as Marico are the top recommendations from Rahul when it comes to the FMCG space. But Rajesh, let me touch upon the Nifty Pharma because this particular index has been showing good moves for the past 3 weeks now. All of these large cap names are definitely buzzing, but this particular sector has been one of the key laggards of 2022. Now that we are seeing a rebound, how are you seeing that on the charts, and how much confidence is that giving you for more upside on all these pharma names, and what are you looking at?
Yeah, significant recovery we have witnessed in the pharma space, and now pharma index is now comfortably trading above 50-day moving average, which clearly suggests that some buying interest is likely to continue further in the short term. Also, some of the pharma stocks have done well in the couple of week. Especially, we believe that Arvindo Pharma looks very attractive at the current juncture, and possibly this stock can continue its up move from the current level also. So Arvindo Pharma is our preferred pick from this space, and we are projecting target of 580 to 590 on a positional basis, and one can buy and accumulate this stock with stop loss of 505. Another stock which we like from that space is Syngene. Syngene, after corrective move, now stock has started its recovery from its lower level. And looking at the overall setup for Syngene, we believe that this stock can continue further more upside from the current level, and one can buy and accumulate this stock also. And we project a target of around 630, 640 in the positional basis. So one can buy Syngene also for a stop loss of 585.
Syngene is one stock that you're positive on, and Aurobindo Pharma is also looking quite attractive with an almost a 10% upside is what he's talking about. The time now to slip into very short break. Don't go anywhere. We'll discuss what's lined up in the coming week when we come back. Welcome back. You're watching your trades on ET now. Let's discuss the big cues which are lined up in the coming week. And of course, IPO earnings is something that is top of my mind with Infosys and TCS reporting their numbers. The street is going a bit muted with the expectations that after the surprise coming in from Accenture, maybe the companies might surprise when it comes to the large deal wins. Rahul, which camp do you want to be in? The one that says that there could be a surprise or there could be a shock?
I think near term, I think should be a surprise. What I feel is rather than a shock. I feel that way the markets have been. I think if you look at Q3 numbers and then post that, I think the events of the banks where we have seen that the global environment where we have it's been very in terms of that. So I feel that tech stocks should be a mixed kind of an earnings, and then from there, and if I have to have a look at a longer term earnings view, then I think I would stick to it. So stocks like HCL Tech, TCS, Infi, all three large caps looks very interesting. All of them have decent valuations at current levels what they've been trading at. So I feel that near term there could be a challenges for 1 or 2 quarters for most of the overall demand perspective in terms of these companies. But if you have a longer term view, then I think one should definitely look at this stocks for investing. So I think a near term could be surprise, but I think going forward, I think one should have a longer term view for us technology stocks.
Okay, so we'll watch out for the earnings. But talking of more earnings, Rajesh, HDFC Bank is also slated to report its number for the upcoming week. And this time around, what we have seen for the past 8 days, the stock has been gaining and there's a one-way rally upwards. How are you seeing this particular counter moving and entering it for the results season? Because the quarterly updates definitely show a good picture. But onto the charts, what are you spotting?
So very strong buying action was there in HDFC Bank, and this is second consecutive week where stock is forming higher high formation, and now in this process, now stock is approaching to its multiple resistance zone area, which is at around 1665, 1670 zone, almost close near to those level. Looking at the long built up on the derivative side, also we believe that this momentum can continue further higher in the coming week, and possibly stock can scale up towards 1730, 1740 in the continuation of this trend. So our view is bullish for HDFC Bank. One can buy and accumulate the stock with stop loss of 1630 and upside target we are projecting 1730 to 1740.
Okay, but Rajesh, other than HDFC Bank, any other stocks that are on your radar when it comes to the upcoming week?
So definitely. So first stock is from real estate space. Very strong buying action for this week on the real estate space, and that is DLF is looking very attractive. Almost 7% gain for this week, and now stock managed to give breakout of its almost 8-week consolidation range. Long built up was there clearly in this week, and looking at the price action, we believe that 400 could be the next target for the stock. One can buy and accumulate with stop loss of 370. Another stock is RK Forge. Stock managed to give breakout on the weekly chart, and looking at the overall setup, long term, short term, medium term, stock is in bullish trend. Strong buying action for this week, 7% gain for this week, and looking at overall setup, we believe that this momentum can continue towards 325, 330 zone. One can buy RK Forge also for upside target of 335. Stop loss one can place at around 296. Third stock is from capital goods space, that is L&T. Stock managed to give breakout of its triangular formation on the weekly chart, and stock is now almost trading near to its all-time high trajectory. So looking at the setup, looking at the derivatives data setup, we believe that L&T can continue furthermore upside momentum towards 2350. So this stock can one buy with the stop loss of 20 to 40.
Okay, so that's the take coming in. Rahul, just zooming out a tad bit and talking about a bit of a macro and a bigger picture. With the RBI decision also for pause coming in, does anything change with respect to your sector view and also with respect to valuations? It's now being said that the Indian markets have become cheap. Is that a buying opportunity for the FIIs and the flows to come back?
I think definitely. I think where the global markets have behaved and where the most of the markets have bounced back from their lows recently, which they made, and I think the India has just started moving in last 3 4 days. What you've seen the action. So and from the large number in the numbers perspective, or the updates perspective, when we saw HDFC, Bajaj Finance, the numbers are pretty strong. So I think that Q4 remains very strong. So my sense is, I think we should get a allocation more, and then there have been continuous sellers. If you look at FIS in the last year and a half, if you look at it, so my sense is, I think we should definitely get some kind of allocation in near term, and then I think most important thing, I think the Q4 also numbers also looks very promising. If you talk about financials, which already started in terms of the updates, I think if you look at cement updates by Ultratech, which came up last week, strong numbers, which looks like. So I think just to give you two perspective, I think two sectors. Thirdly, I think auto sales number are also pretty strong, which you look at in passenger vehicle segment. So I think more or less, I think the numbers perspective, they are in line. So I think if the numbers comes, then I don't think so that FIs need to be underweight on India. So I feel that there should be a re-rating again, and we should see that investors coming back.
The top sectoral bets by Rahul, but for this gentleman, we'll let you go on that. Thank you so much, Rajesh, as well as Rahul, for joining us today on ET Now and helping with your take and the outlook for the upcoming week. But let's move forward.